market and what is going to happen with the bank funding program. So, if you guys like what you're hearing today, drop a like, comment down below, and let's jump right into it. Starting with what caused this entire stock market rally to explode higher, because as you can see in the daily chart of the SPY, you were getting a pullback for a little bit down here, and this is when I made this video on this day. It had this little pullback, and then Nvidia earnings came out as a catalyst and exploded higher. Like I said in the video prior, I was not expecting Nvidia to beat earnings or to be, you know, like expanding as much as they have, but kudos to them. You can't win them all, right? So that's why I'm not a financial advisor. I hope you guys didn't listen to me. I hope you guys didn't lose any money, and if you did, that is why you should come to your own conclusions. I'm just a guy that likes to talk about this stuff because I think it's interesting. Now, let's get into the real meat and potatoes of what is going on, why the stock market continues to blast higher, and why we might go even higher from here. I am short-term bullish, long-term bearish. What does that mean? Well, that basically means in the short term, it could be between anywhere from March all the way until October. I am going to be short-term bullish, meaning that I'm going to follow these trends, but I'm going to be extremely cautious. Take that with a grain of salt, because there's a lot of things, a lot of catalysts that we aren't seeing in the background play out within the stock market. You know, there's a lot of things going on, but at the same time, the stock market has been ignoring all types of bad news, all types of economic news. It's just been ignoring everything. It's been mainly focused on Nvidia and earnings season. Earnings season is now out of the way, and now you're even still breaking out. And what I've noticed is that it has been following Nvidia like a T. The days where Nvidia is red, for example, right here, you have red days on the SPY, and then vice versa. You had a green day on Nvidia, you had a green day on the SPY. Not hit an all-time high. As a matter of fact, they're not even close. And why is that? It is because the market is not sustainable for this rally that you see within the stock market. And this begs the question, is there a bigger issue at play? Because even though the NASDAQ, the SPY, and the Dow, they're all hitting all-time highs, the Russell 2000, it's not hitting all-time highs. And you may be sitting to yourself, why is that, Soros? Well, the Russell 2000, there are a lot of companies within that category. Even though they're the top 2,000 companies in the world, they have a lot of debt. And with debt comes interest rates. And the higher the interest rates, the more expensive debt is, the worse a company is going to perform, because that is going to eat into their margins, their profits, all that sort of stuff. So, with that being said, if you see the IBM, selling off or not breaking out like, the SPY or Nvidia or the NASDAQ, it should lead you to come to some concerns, because in the past, what would happen is you would have the IBM, the Russell 2000 actually lead, the small caps lead before the big caps lead, because the Russell was more susceptible to changes within the economy. They are more susceptible to interest rate changes, all that sort of stuff. So a rate cut may be bullish for the market, quote unquote. Hence why I say short-term bullish, long-term bearish, because rate cuts aren't really a bullish catalyst. They are a buy the rumor, sell the news event, which is why I also stated in that video, if we do happen. Now, I said in the video also that the Fed's going to be cutting rates sooner than everybody thinks, and that is going to lead a shock in the market. Because what is the Fed going to do with this bank funding program? We don't know for sure. I'll make a video on that, talking about how this bank funding program that expires in March 14th. So in less than 2 weeks, you will be getting a a catalyst that could potentially cause a move like you saw in March of 2020. Am I saying that is a definite possibility? No. What I'm saying is that is going to be a extreme catalyst, and nobody's talking about that because everybody's talking about the Magnificent Seven, for example. They're talking about Nvidia, for example. They're talking about the SPY and the Nasdaq all-time highs, but nobody's talking about what's happening underneath the surface, being what are they going to do with interest rates, or what's going to happen with interest rates going to the future. As a matter of fact, this stock market rally that you see, if we zoom out, let's go back to the SPY real quick. If you zoom out, this stock market rally that occurred right here, that was because of rate cut optimism, aka the Fed's gonna cut rates next year in 2024, and they're gonna, cut 6 rates. Now the market is predicting the Fed is only gonna cut 3 times. So that means you have priced out rate cuts at a fast rate to where the Fed wants them to, and the market has no reaction but to go higher. Now, what this means is that at first everybody was focused on economic policy and, what's going to happen with the economy and inflation. But as you start going up and up and up, it starts becoming this manic sort of rally. As you can see with Nvidia, for example, once we came to this catalyst, Nvidia and the SPY started moving together, and that's not normal. That is extremely abnormal, and that is a sign for concern. Mainly because if you have one stock moving the entire stock market, that is a very bad sign, because once this company starts to slow down in profit margins and earnings and all that sort of stuff, you will witness a collapse, just like what happened in 2000 and in 2008. And if you don't believe me, check out what happened. The stock market ran up, and now it's running up even higher off of one stock. This is all off of one stock. And if you think this is some hyperbole or, all that sort of stuff, look at the chart. Red days, red days, red days. Then you had a green day, Nvidia earnings, green day, red day, red day, red day, you had a green day. But then look, 3 green days in a row, 3 green days in a row. So, like I said, Nvidia is running the entirety of the stock market, and then not only that, market breadth is widening, quote unquote, but you still see the Russell not even near the highs of 2022. So is market breadth really widening, or is it just more tech companies getting involved? I don't know. You guys can be the judge of that. But like I said, I just want to paint you guys with the question here. What is the market going to do with the Fed's bank funding program? That is going to be the real catalyst nobody is talking about. Even though Jerome Powell speaks this week, I'm not even concerned about what he's going to say, because the stock market has been ignoring everything from economic data all the way to Fed speakers, all the way from shocks in the market, things that you would expect the market to go down off of. We actually had a bad inflation print that happened on Friday. And you want to know what happened on Friday? You hit a new all-time high. And then you want to know what happened here? This was a bad inflation print. The next day, you gave it right back up, only to go even higher. So like I said, this, if anything has showed me for these past 2 weeks, it has showed me one thing. The market does not care about anything else, and it's only focused on how we can siphon all the money from Nvidia and these chip stocks and AI. And that is why I'm saying this is going to be, a great collapse. Now, am I saying it's going to happen tomorrow or next week? No, but one of the catalysts that could start it all is the Fed's bank funding program, because it expires on March 14th, and after that, you are going to see issues in the banking system, whether that be a liquidity crunch, you know, things like that. I'll get into a video on that because that is very, very important, and there's a lot that goes into that concept. And that is going to be extremely important. That's going to be given a deeper dive as to the consequences that can happen on the stock market. But for now, what I want you guys to focus on is why this rally is occurring. And to be honest with you guys, the market is seeing green. The market thinks everything is okay. Inflation is going down. As a matter of fact, it's reached the point to where the market doesn't care about anything else. Now, what I will say though is if the bond market continues to sell off like it has been for the last couple of days, this is some extreme volatility we're seeing in the bond market, and the SPY and the bond market are extremely disconnected. They are extremely disconnected. They are not agreeing with each other at all because, as you can see, the bond market is still near the lows. It's still near the lows. Interest rates are still near, multi-year highs, and the stock market is like, yeah, but we have AI. So you have to be weary about that. Now, the stock market can't ignore the bond market anymore. If the bond market decides to hit 90 and then goes below that, if yields go to 4.5 to 4.7, the stock market cannot ignore that any longer because that puts pressure on the Russell 2000, and that is a sign that things are not as strong as they seem. And I have one more thing for you. Apple, the biggest company in the world, it got downgraded by JP Morgan and Goldman Sachs. Now, this is important because Apple is one of the biggest companies in the world in the markets, and they have been, a part of the Magnificent Seven. So if Apple isn't even catching any love from this AI mania that we're going on, you are going to be seeing a lot of issues moving forward. And they close below a key level, 180. They close below 180. Now, what that means is that they could go as low as 170, 167. Now, will that happen? We got to find out tomorrow when the market opens. Let's see how they respond. But I don't think that's going to be a good response, especially because of them downgrading Apple as not one of the top stocks in the world. And this is a really ugly chart. This chart has just been in this little range for almost 3 months now, and this is disgusting to look at, and this is a lot of volatility, and you notice that the stock market has gone higher. So this is more evidence to say that the stock market is being propped up by one stock, aka Nvidia, and everybody's piling in on it. But that doesn't mean you can't go against the trend. If the stock market's going to continue to go higher, the only choice is to find ways to profit off the stock market going higher. But I will say is the bigger they are, the harder they fall. So you rather fall here, or would you rather fall when the stock market's at 550, 600, and then you go all the way back to the October lows of 22? Because a 600 drop to 348 is much greater than a 513 drop to 348. You see what I'm saying? And that is going to be the difference between an economic depression or a recession, and that is just going to cause a lot of problems within the stock market and all that sort of stuff. So now, what I will say, one thing that is bullish about March is that March is usually a positive return for the stock market. Now, what makes this interesting is that last month was supposed to be a negative return for the stock market, and that did not happen. You did not see a stock market sell off in May. As a matter of fact, we ripped through it and went higher. Now, what is going to happen in March? We don't know. Could we see a 2020 style like sell off that happened in March? Possibly, but statistically speaking, you are higher in March and you are higher in April. Now, what I will say is that you have the bank funding program, We will see what will happen with those if they expire. Well, not if they expire, but what will banks do to pay off all that debt and all of the, you know, all those bonds. We will see what happens with that. And if they can't pay it off, then what are the consequences of that? Like I said, I am going to have a breakdown about this whole situation because this is just bigger than the stock market. This affects, the fate of the economy. There's a lot riding on February 14th, and not many people are talking about it. And I'm not saying that as a, oh, you know, I'm not saying this as a conspiracy theorist. I'm saying this as point blank. That is a lot of money that the Fed gave away during the banking crisis last year. And it was almost like, a band aid to a gunshot wound. There is a bigger problem going on that nobody wants to talk about, nobody is looking at. And the fact that the Fed now has to face an expiry of all of that money. Where is it going to come from? What's going to happen? We will find out. Like I said, that is going to be a different video I'm going to make. I keep repeating myself because it is that important. But if you do not see anything bad come out of this banking refunding program, March is usually a good month leading into April, and then May you get a little bit more volatility. But now, this is Goldman Sachs removing Apple from, one of the highest lists you can be on. They downgraded Apple once again. Nothing too crazy. I already went over that. Now, as we can see, let's take a look at what the market is saying. And would you look at that? They priced out March rate cuts as well as May rate cuts. Now, what's interesting is that June is still a 50-50, and that's not good. You want to know why that's not good? Because if June is still a 50-50, that means the market may be pricing out more rate cuts. So when the rate cut does happen, that is going to be a negative catalyst. On top of that, this just gives more fuel to the fire in terms of this rally is not built off of the rate cut theory anymore. It is still a part of the broader rally, but this rally is more AI and NVIDIA, and we're just gonna prop everything up to the moon because that's what's happening right now. You see companies like AMD, ARM. AMD moved 12% in the last 2 days. That is an absolutely insane move, and that it does not happen on a regular basis. And if you're telling me it does, then you have not been in the markets too long. Now, with that being said, June is still up for grabs, but July is when they expect the Fed to cut rates. So, it is going to be very, very interesting in terms of what the Fed is going to do, what Jerome Powell is going to say, especially with the inflation data and inflation possibly coming back. With bad CPI, bad PPI, you still have a strong economy. Now, could you say it's a soft landing? No, because you cannot defeat inflation without having a recession. That's just not how that works. That is the economic cycle. In order to defeat inflation, you have to have a recession. Why? Because that lessens demand. And if you lessen demand, prices are going to go down. And so far you haven't really seen that. Yes, you've seen prices go down, but you still have an extremely hot labor market, all that sort of stuff. So it's going to be really hard for the Fed to even consider cut rates unless you have a situation in March that will cause the Fed to panic and say, hey, we're cutting rates. Because if you see an emergency rate cut, that is a bad sign. As a matter of fact, let's look at what happened in 2020. The Fed cut rates in March. They said emergency rate cut. You saw what happened to the stock market. You went from 330 to 340 all the way down to damn near 200 after them saying an emergency rate cut. So why does everybody think the rate cut is bullish? Because they have a false idea of what the rate cut really is. Now, like I said, the fear and greed index, we're still at those elevated levels, but the market does not care. Everybody's getting greedy. So hey, if you're gonna chase the market, I don't recommend chasing the market. I recommend waiting to see the trend. But if the trend is bullish and everything is going against it, these are contrarian indicators, and contrarian indicators can be wrong at times. So you got to be mindful of what you want to do. Also, market volatility extremely low. This is concerning because you see the 50-day moving average, it is kind of just sitting at this area right here. So you get a huge spike and it is going to be a bad day for the markets. Junk bonds, safe haven demand, everything, extreme greed. Everybody is buying up everything in hopes that the market is going higher. Now, that is it, ladies and gentlemen. I hope you guys enjoyed this stock market breakdown. There's not a lot. There's not a lot to go over in terms of what's going to happen next week because, like I said, the main meat and potatoes is going to be March 14th when the Fed ends their Fed funding program. That is going to be the real catalyst. But as far as everything else that's going on next week, you do have Jerome Powell speaking Wednesday and Thursday, so you got to keep that in mind. But it is going to be another, lesser important week, but still kind of important. What will Jerome Powell say? In my personal opinion, I don't think there's anything that Powell can really say that can stop this freight train that you call a stock market rally, because if anything were to stop it, it would have been bad inflation data, and you got that, and it still ran higher. So I think Jerome Powell has lost control of the stock market as well as lost control of basically the entire situation. He's lost control of the entirety of the situation. At this point now, Powell is really just waiting and reacting because there's nothing he can do anymore. He had control when we were over here, and then he gave it up once you had the March, the March banking crisis fiasco. He gave it up. He said, all right, guys, we're going to bail out the banks once again. And then, now we're here. Now Judgment Day is coming on March 14th. Do I expect a big move that day? No. But that is going to be an extreme risk that no one is looking at. And if you want to go long, you can go long. You want to go short, go short. I'm not going to tell you guys what to do. Not a financial advisor. But what I will say is be careful, because being early is the same as being wrong. That is a quote from Warren Buffett. Now, that is it, ladies and gentlemen. I hope you guys enjoyed this stock market, little brief. If you enjoyed the video, like, comment, subscribe, and I'll see y'all in